Guys, Bill here, and in this video I'm going to talk about trading failed breakouts and breakdowns. This is something I've been starting to look more and more for in this market because I've found that your standard breakouts, even on setups I like inside bars or opening ranges, are just not quite as reliable as they used to be maybe a year ago, or especially 2 years ago, when the market just kind of kept going up every day and you could just buy the dip and play breakouts every day and win at a high rate. Not so much the case anymore in this bear market. A lot more success to be found on retracements and, pulls and retests to these levels, playing reversals more so than breakouts. And it's a common phrase in trading. Oftentimes the best breakdowns are failed breakouts and vice versa. So, what you'll see here is I've got a fib drawn on my chart, for the recent uptrend, right, in this little bear market rally that started in December. And these levels, are super important that I keep my eye on intraday as well. And you're going to be seeing these levels create some great opportunities for failed breakouts and breakdowns. On SPY, let's look at Thursday. Thursday is a great example because, excuse me, we get a failed breakout and then we get a failed breakdown later. So here's what I'm looking at. These two fib levels, the 382 and the 50. Of that fib I just showed you on the daily chart. What we're seeing here is initially off the open, we reject it, we test it and reject it. So we're already kind of seeing that this level is a little bit important here, but then we actually confirm over it. And a lot of times you'd be thinking, okay, we failed it once and now we're confirming over it. We're even retesting. We're closing 2 green candles over. Let's go long here. And that's a totally fine idea. You can't win on every trade, even if it's a decent setup. And this is not a bad long side setup, right? But what happens is we end up within 2 more candles, we're back under and we're invalidated, the setup to go long now. And once we do, look at the move that we get within the next couple hours. There's a little bit of a flag, then a huge flush, another little flag, flush and fade all the way down to our next fib area. So in these situations, when you get some confirmation over a level and it ends up failing before really making a big move, that's a great opportunity to go short. And you could have done so just on this 5-minute close under, okay? And now we see basically the inverse. We come all the way down, and we close under this 50 fib, but immediately we close back over, and buyers keep stepping in. Every time price tries to get below this level, it doesn't get too far, and it's sent right back up, right? So anytime in this, kind of consolidation phase where you start, first you see the invalidation of the breakdown, then you see that protection. Anytime in here is a great entry. And, sometimes these moves take a little while, right? It's a slow grind up. So the best thing to do is to buy yourself some time on your contracts. I know, with SPY now, we got 0 DTE every day. It's very tempting, very fun. Things move fast, all that. But it's a lot safer and smarter oftentimes to buy yourself some time, 5 days a week, whatever it may be, so that you can get an entry like this. And, if it does end up closing below, you can get out with a small loss, but you can also not be so worried about theta and this move, which is a nice another, $6 move up, just like we got, from the move down, we retraced it all the way back. It takes a couple hours and you don't have to be worrying about, you're up here on your 0 DTEs, still break even, because of that theta, the longer you sit in these contracts. But these are just 2 great examples of failed breakouts. Let's check Friday out. There's another good one here. Okay. So same level from yesterday. It was support yesterday, right? We found the bottom, nice big ramp. Well, today it's been turned into resistance. We lost it in pre-market on the heels of some bad data. We retested it off the open and failed. And now here we are retesting it again, but we actually wick over it this time and close back under on a nice little volume increase too. You can kind of see these last 2 candles heading up are on decreasing volume and then increasing volume here as sellers step in and say, nope, you're not getting over this level right now. And on that kind of candle, it's also like a shooting star candle, you could say. That's bearish, right? So here you're entering on this close and a nice little, smooth move down. All right. It even kind of get another fake breakout here. We get confirmation. It keeps retesting. It's holding, but it can't make its mind up. And eventually you get the flush down. There's some, some little choppiness here. You get a close under, close over, close under. But this is kind of the setups I'm starting to look for more and more, guys. I still love the inside bars. And I still love the opening ranges, but you can play those ranges too. Like, these levels are obviously for, the high and low of that day. So it's, you can tell that that's where we're bouncing and we're bouncing there. But if this was the next day's price action and these were the previous days, highs and lows, then you could look to play once you find support down here at previous day's low, you can look to play the bounce back up. That's what I mean by playing the range. And I have videos on that as well with the inside bar plays if you're interested. And this theory, the failed breakouts and breakdowns can also be applied to daily charts. So if you guys would like to see a video about that, let me know. It's a good way to kind of maybe do some prep and find plays for the next day or two. If a stock has come down to an area of major support or resistance and it's failing to break out, it does like a little fake breakout. That could be a great play the next day going the opposite way. But that's it, guys. If you have any questions, let me know and I'll help you out.